How do you get a collection removed even though it's been paid? Student loans and how they're calculated into debt. Is the process the same for investment property? Would 2 lines of credit be acceptable to start the process of pre-qualification? Is going the modular home route less expensive? I freaking love this question. How much is it to go with the mortgage broker versus going to a bank? How do we get lates removed? What is the rent to own process? How and what is your opinion about new construction? Hey honeybees, welcome back to my channel. Or if you're new, my name is Ciara and I do videos on finance and lifestyle. I am a full-time mortgage loan officer and I have helped hundreds of people to buy homes and build wealth. So I take what I know and share it with you in hopes that you will build wealth also. Okay, so in today's video, I'm going to do another mortgage Q&A so that I can specifically answer some of your questions, maybe questions that aren't covered already in my previous videos or on my mortgage playlist. So stay tuned because I might be answering your question. Thank you so much to Audible, who's the sponsor for today's video. Audible is actually the leading provider of spoken word entertainment all in one place. At Audible, you get the largest selection of audiobooks ranging from bestsellers and new releases to celebrity memoirs, languages, business, motivation, and a ton more. You can get original content from top celebrity creators and thousands of popular and binge-worthy podcasts. So as an Audible member, you will get 1 credit every month, which is good for any title in their premium selection. And those titles are yours to keep forever in your audio library. And you get full access to their Popular Plus catalog, which is filled with thousands and thousands of audiobooks, original entertainment, guided fitness and meditation, sleep tracks for better rest, and podcasts. And what I love about Audible is that you can find a title in almost anything that you're into. Right now, I'm listening to Think and Grow Rich by Napoleon Hill. It's a book that a lot of millionaires, billionaires, entrepreneurs, really successful people have recommended. I made a goal this year to read 1 book a month, and this has made it a lot easier. It's just really convenient, especially if you're someone that's busy like me. And new Audible members get a 30-day free trial. That's how I started. So definitely check out Audible. Go to audible.com/Ciara Elaine or send Ciara Elaine to 500-500. That's audible.com/Ciara Elaine, or you can send a text, send Ciara Elaine to 500-500. Thank you so much to Audible for sponsoring this video. Now let's get into it. Okay, so as per usual, I'm just gonna go through and pick some questions to answer. These are gonna be from YouTube mostly. Now, what is the rent to own process? And does having an eviction keep me from getting a loan? Or is there a way around that? This is actually probably a better question for a real estate agent because I don't handle the renting side. All I do is finance home ownership. I have had some clients, I think maybe like 1 or 2 clients who have done rent to own or attempted to rent to own, and what happens is they usually have to get like a pre-approval letter or pre-qualification letter or a letter from me as a lender basically saying that they are working towards approval. I don't know if that's standard practice, but that's the only experience I've had with rent to own. Does having an eviction keep you from getting a loan? No, it doesn't. How and what is your opinion about new construction, USDA, and conventional loan? We have some land that we want to build on, and we're trying to figure out what will be the best way to go about the process. Also, we're first-time buyers. Just a little confused on what to do. Okay, so for first-time home buyers, if you're asking my personal opinion, I don't think it's the best idea to go in full construction, especially right now during the pandemic. Materials and labor are more expensive right now, and it's taking longer to get things built. I will say that if you're gonna do like a turnkey new build, like a mass production kind of new build, then that should be fine. But as a first-time home buyer, I would try to go with something that's already pre-existing or mass production, just because it's less costly, it's less time, it's less stress, and for me as a first-time home buyer, I would want to make the process as easy as possible for myself, but that's just my opinion. You can go whatever route you want to go. If you want to do ground up construction, then you would need to first get your land, and you would get a land loan from the bank, and then you would get a construction loan, and at the end, you could combine both into what we call a one-time close, which is something that I do, which is where we combine the land loan and the construction loan into one standard mortgage loan, and you could do it that way also. I have a second job that I've been employed at for about a year and a half. Will I be able to use income from this employer as well? Great question. So as you guys know, or if you've watched my videos, the rule of thumb, in order to include your income from an employer, you have to have 2 years history with the same employer, in the same position, or in the same industry, okay? 2 years consecutively. Now, there are exceptions here and there. I will say with FHA, I have had a case where I had a client who had a part-time job that she had had for a year and a half, and they did allow us to use that income, but that's on a case-by-case basis. I wouldn't bank on being able to use your income if it's less than 2 years. 2 years is the rule of thumb, but there are exceptions on a case-by-case basis depending on what the underwriter decides. Ooh, here's a great question. How long should I wait after bankruptcy to start the process of buying a home? That depends on what kind of bankruptcy it was. So for Chapter 13 bankruptcy, you can apply for a home right away after discharge if you're going FHA. If you're going conventional, then you will have to wait. I think it's 2 years. I'm gonna do a little infographic to give you guys the breakdown of the waiting period. If you're Chapter 7 bankruptcy, then you have to wait a little bit longer than if it's Chapter 13 bankruptcy. So it really depends on, number one, what kind of bankruptcy it is, and number two, what kind of loan you are applying for. I was a full-time housekeeper for the last 8 years. I was laid off at the start of the pandemic. I started working another job in a different field. Will that be a problem when going to be approved for a home loan? I think I actually followed this question up to find out how long this person has been in their new field, and they said 8 months. So no, you would not be able to use that income. The rule of thumb is 2 years in the same industry, in the same role, or with the same employer. Ooh, this is a really great question. My job is laying me off, and I am 30 days from closing. If I'm laid off, can I find another job immediately and keep my process to closing going, or will I be denied altogether? This is a really great question. So number one, if you're able to find employment very quickly and it is within the same industry that you worked in before or in the same position or role, then that income can be counted. But you also have to make sure that you are receiving the same amount of income or more. If you take a pay cut, that may make your DTI go up, which can push you out of approval status. So definitely make sure that if you are going to get a new job, that you do get it immediately, like you said, and you get it within the same line of work and you're making the same amount of income or more. Also make sure that it is pretty immediate. You don't want to wait too close to closing, because underwriting is required to verify that you are still employed a few days before closing. So make sure that you are employed, but as long as you're within the same industry, line of work, field of work, and making the same income, you should be good. I live in Louisiana, whoop whoop, saving to buy a home. My question is going the modular home route less expensive / more affordable than buying a home already on property? So when you say modular home, I'm guessing you mean like a mobile home or manufactured home. And no, it's not less expensive or more affordable. It's actually more expensive, and you get less value from that. Anytime that you're going to do like a mobile home or manufactured home or something like that, the process is going to be longer. There's going to be more paperwork. The pricing isn't going to be good, so your rates aren't going to be as good. Your origination fees are going to be higher. So no, it is not more affordable. It is not less expensive. Someone wants to know, what states do I cover? Okay, so my company, we cover Louisiana, Texas, Mississippi, Alabama, Florida, Georgia, Colorado, Kansas. I think I got all of them, but you can always find the states that I cover in the description box. In the description box, it's always down there. Every single video I do, it's always down there. So yeah, those are the states that we cover. Oh, this is a great question. I'm a physician with about a year remaining of training. My debt to income ratio is not ideal because of student loans and my training salary. Are there circumstances like mine that still work out to buy a home? After training, my salary should increase, but right now my DTI doesn't make it look that way. My credit score is above 780, and outside of my student loans, I don't have any other debts. Great question. Yes, this is something that is offered through one of our lenders. I can't speak for all mortgage companies. I don't know what state you're in. I don't know what mortgage lender you would be using, but with us, we have access to a doctor's loan or physician loan. I will put some information in the description about it because I don't have the data right in front of me, but there is a special physician's loan that is used to take into account you all's unique challenges in terms of the student loans and the training salary. And if you've got a decent credit score, which is above 780, and if you can do one of those doctor's loans, then you should be good to go. Okay, so I did get a question about student loans and how they're calculated into debt. I do have videos where I have covered this, but I'm going to talk about it again because I do get this question a lot. And I got lots of questions regarding this. So I will try to break it down to you. Okay, so general rule of thumb, if your student loans are in deferment, we have to count 1% of the entire balance as a monthly payment in your DTI. So for example, if you have $50,000 worth of student loans and they are in deferment, then we have to count a $500 a month payment in your DTI. Now, if you have an income-driven repayment plan, we can use the income-driven repayment amount instead of the 1% on a conventional loan, not an FHA loan. Conventional loan is the loan in which we can use an income-driven repayment payment. Now, another way to hack the system, so to speak, is you can get a standard repayment plan, which is just a fully amortized your standard payment. And if that amount is lower than the 1%, then that may be a good option to do if you're going FHA. But if you're going conventional, definitely try to get an income-driven repayment plan. And if you're going FHA, try to make sure you have a standard repayment plan. I think that's the easiest way or the easiest rule of thumb to use when thinking about student loan debt. Ooh, y'all are coming with the good questions. Does taking deductions on 2020 taxes, i.e. claiming dependents, writing off business supplies, etc., to lower the income to save on your taxes, can it hurt your chance of getting a bigger mortgage loan amount in 2021? Yes. If you are a business owner or if you get paid via 1099, then instead of W-2s, we use your tax returns to calculate your income. Your income that's calculated is going to be your net, not your gross. So if you have made $100,000 that year as a self-employed borrower or in 1099 income, but you wrote off $80,000 in deductions, then that means the income that we calculate is $20,000. As you can see, $100,000 versus $20,000 income makes a huge difference. So in order to get approved for the most money as possible, you have to limit your deductions. I know it kind of sucks because you have to end up paying more in taxes. Trust me, I know. It really does suck because you have to pay more in taxes, but you know, that's the name of the game. So just try to minimize your deductions if you know that you are going to be buying property, because that will help you get approved for more. Would 2 lines of credit be acceptable to start the process of pre-qualification? Pre-qualification, mind you, is different than pre-approval, so I just want to clarify that again. Pre-qualification is just a verbal confirmation, and pre-approval is like a full approval that you can use to put an offer on a house. So when it comes to pre-qualification, you don't really have to have anything in place for pre-qualification. Now, if you're talking about approval, when you're doing the approval process, if you only have 2 trade lines, you know, we try to advise you to have 3 trade lines, but if you're referring to the approval process, 2 trade lines can be enough. We like to advise that you have 3, but let's say you have 2 trade lines and in order to get approved, you need more, then you can show alternate trade lines, which could be like your gym bill, anything you've paid on time for the past year. That could be your car insurance, your cell phone bill, electricity bill. So if you only have 2 lines of credit, just make sure that you have 1 other trade line in your back pocket that you could possibly use if you had to for approval. How much is it to go with the mortgage broker versus going to a bank? There's no one set price for either. It doesn't necessarily work like that. But what I can tell you is that working with a mortgage broker is going to have more control over the pricing, whereas a bank, loan originator at the bank, is going to have less control over the pricing. So there's no one set pricing for either one, but if you're looking to really get the best deal, then my opinion is to go with the mortgage broker because they have more access to wholesale lenders and pricing, and they can control the pricing more, and it's just you're able to get more of a deal that way, in my opinion. How do you get a collection removed even though it's been paid? Ask for a pay for delete. So if you've already paid it, then I would assume that you hadn't asked for like a deletion letter. So the only way to get it deleted if you've paid it is to ask for a goodwill deletion, or you can dispute it and see if it'll come off that way. I do have a video up on credit, and so definitely check out my credit videos because I go into a lot more detail in those. I freaking love this question. Can money be gifted from a sugar daddy? No, unless he is a relative. So unless you say like he's your cousin or your grandfather, maybe if you say he's your grandfather. Typically gifts are reserved for like a family member. So if your sugar daddy is also your family member, then yeah, he could gift you. I needed that laugh. Is the process the same for investment property? I'm so glad you asked. I actually did an entire video on this, so that will be in my mortgage playlist. Definitely check that out. Again, I do get a lot of questions where people are like, I make this much, or my cousin makes this much, pays this much in rent, has this amount of bills, gets this in income, can he get approved? I can't answer those questions in these videos. In order to let anyone know, number one, if they're pre-qualified, I have to go through a pre-qualification with someone. Number two, I cannot let anyone know they're pre-approved just from you just telling me how much you make or someone makes or how much their debts are. Credit has to be pulled to verify it, and income documents have to be submitted to verify income. So I cannot let anyone know if they're approved by them simply giving me information in, online, like through the comments, unfortunately. So, but if you are in one of the states that my company covers and you would like to get pre-qualified, you can send me an email at Ciara, C-I-A-R-A, at reliantapproval.com and put pre-qualification request in the subject line, and make sure you are buying in one of the states I cover, because if it's not in one of the states I cover, then I cannot pre-qualify you. So yeah, those are the best way to do pre-qualifications for me, not necessarily in these videos. My husband and I are currently in the search for a home. He has a significantly better credit score than I do. I'm right out of the 600s and he's nearing 700. Is it possible that his name is able to be solely on the mortgage and my name be on the deed? It depends on what state you're in. So if you are in a community property state, you can have one spouse that is on the mortgage, but the other spouse's debts still have to be counted in the DTI. So the answer overall is yes, but make sure to understand or to know if you're in a community property state, because your debts will still have to go into the DTI, which may or may not lower your approval amount. So the answer is yes, but be mindful of if you're in a community property state or not. How do we get lates removed? You pretty much have to call the company and explain to them the circumstances for which it was late and ask them to remove it. And if they agree, then make sure you get a letter confirming that. Otherwise, the late is just gonna stay on there, unfortunately. So you really have to talk to people. They may have you submit documents. You have to have a good reason. They're usually not just going to delete them just cause, but the best way to get lates removed is to reach out to the company, ask them, make sure you get it in writing, and then wait for it to get updated on your credit report. If it doesn't update after 30 days, you have that document you can submit to the bureaus and have them updated. Hi, do you cover Illinois? No, I don't. So this person is changing their profession to a mortgage loan officer from a bank manager, and they've been with the company for 8 years. Will this job change or affect their home buying process, my home buying process, or would this be considered the same field? Yes, that would be considered the same field because it's the financial industry. Leave your mortgage questions in the comment section below so that I can answer your question in the next Q&A video. Make sure to subscribe to be a part of the Honeybee fam. Make sure to hit the notification bell button so you can be notified when I upload. I respond to all questions in the first 24 hours of posting a video, so it's so important you have that bell button clicked. And then while you're at it, give me a thumbs up if you learned something from this video, if I was able to answer one of your questions, or I just provided value to you in some way. Thank you guys so much for watching. I love you to the bank and back, and I will see you in my next video.